Welcome to the most important 10 minutes of your day when it comes to your future and financial freedom. What does learning how to chart stocks mean? It means that you have the ability to create a virtual printing press when you get good at this, and a printing press of wealth. Why? Because if you can follow stock charts, such as when the weekly vertical crossovers occur, when to get in and to ride that chart up, or when to get out of the market and let it crash or ride it down. Now, those of you who are new to things, how do you ride down a price without losing your backside? Well, it's called an inverse fund, and we have a great teaching on that. I'll put it at the end of today's video on inverse funds, how to make money when markets crash. And we have a great video that is available if you are a subscriber. It'll be attached in the show notes. We're going to keep offering it through the end of the week. It is the coming market crash. Are you ready? And in fact, my question is, are you ready to actually not lose money and even better, make money? That's why we want you to train with us. We're not a stock calling service. We're not going to give you a call on when to get in or out of the market. You're going to make that call on your own. You're going to learn how to chart these stocks, and we are going to help teach you. How do you do that? You follow us 10 minutes a day, every day. And you take all the great trainings that we have to offer at the website. If you'd like to buy our book, there's links in the show notes. Want to be a Patreon supporter? Even better. I'll tell you more about that at the end of the video. You're giving me 10 minutes. Let's jump. Okay, what do we see going on? Well, we had super profitable trades all the way up. Now we can see things have been moving sideways for several weeks, had an up week in the prior week, and then things looking not so good as we end the week. Again, more indecision. Now, if you recall, we look at our quarterly chart. Those who've been with us a long time, you know about the quarterly chart. We're into the second quarter of down moves. Market actually topped, in case you didn't know this, it topped all the way back in September of last year. That quarterly chart did. We had a quarterly crossover. It's the biggest thing we look at. We're now into the second quarter of of down moves in the market with this crossover derivative oscillator and the price percent oscillator crossed over going down. What do we see happening, of course, in our weekly chart? We see a red doji that is formed at this point. Down 0.52% for the day on the S&P 500 derivative oscillator, continuing to lose energy. And that doji in our Heikin-Ashi candlesticks means lots of indecision. That's what a doji is, lots and lots of indecision, tending down. Price has moved below the weekly trend line. And again, we still have the price percent oscillator going up, which is important, but it is getting weaker as time goes along. We go from the weekly to the 2-day, and of course we had the 2-day crossover going down back on the 22nd. We had a down candle with the last full down candle that ended Tuesday the 26th. At the end of the day on Thursday, you will have a fully grown candle on the 2-day chart. Right now we have a green, we'd call it a green spinning top, means indecision, tending up. Price is below the 2-day trend line. It is above, just above the weekly, but again, we see the price percent oscillator, our main indicator, pulling away from the red signal line and the derivative oscillator gaining downward momentum. That, of course, is important. We go to the 4-hour chart, and again, we've been negative for a while, hoping maybe to move up in crossover, but bounced off the 2-day trend line and continues down. So down in the morning, down in the afternoon. Actually important that the 4-hour chart is pushed through the weekly up trend line. So again, if for some reason you were still in an up trade on the S&P 500, don't know why, but now you've got even more contraindication on that trade. So that's where we are on the S&P, waiting for it to sort itself out. If and when we have a weekly vertical crossover on the weekly chart, we will let you know. Now, that is long in the tooth. I mean, not super long in the tooth, but it's been going on since the 25th of January. And of course, now things are sliding sideways, tending down at this point. We go from the S&P 500 next to the NASDAQ 100, down a little more for the day, 0.64%. We have a red open box candle. Again, it's not the kind of stronger down moves that we're seeing in the S&P 500, and sure not a solid red down candle. Does mean some caution, though. We've fallen below the 2-day trend line. Derivative oscillator losing momentum. Price percent oscillator blowing off some of that upward steam. Still heading up, but not as strongly as it had been before. Where we see even more weakness is in this 2-day chart. Derivative oscillator had been sliding sideways. It's lost momentum. And we see that blue price percent oscillator, getting ready to cross over the red signal line. We have a red doji formed. We had one previously in that fully drawn candle ending Tuesday the 26th. So more indecision tending down has pushed through, of course, that 2-day trend line, still above the weekly. And we look at that 4-hour chart, and of course we can see down in the morning further down, we had a stronger down candle in the afternoon, no wick on top, just a wick on the bottom. Of course, it's still above that weekly, but heading down, price percent oscillator heading down, derivative oscillators about flat for the day, down in the morning, and then flat in the afternoon. So again, we're just continuing to watch, see how things will sort out. Of course, if we see things turn around and cross back over going up on that 4-hour chart, as long as the 2 days not crossed over going down, we would have a jumping in point. Don't know if that's going to occur. We'll watch. What do we see happening with bonds? Hey, they are, again, spiking up as the charts go down on stocks. You typically see money flee to bonds, and that's what we're seeing. Bonds up 0.92%, so almost 1% for the day. And of course, you can see where that price percent oscillator over the last, going into the 3rd week, has really spiked up. Derivative oscillator gaining upward momentum, and a big candle, still within the Bollinger Bands, but moving up quite strongly. We go from the weekly to the 2-day, and of course, building up further steam. The first day of this latest 2-day candle moving up quite nicely. In fact, we can build a little bit better trend line at this point. And yes, we're connecting 3 candles so far. That's quite nice. Price percent oscillator heading up, derivative oscillator heading up quite nicely after that 2-day crossover back on the 2-day candle ending the 20th of March. We go to that 4-hour chart. And what do we see there? Well, of course, we had the crossover there in the afternoon, jumping in point back on Wednesday the 20th. And again, somewhere at about the we'll say 122 marker, so it's hard to call it on after the fact on Heikin Ashi candles, but somewhere around there. And of course, bumped up as high as what? 2634. Yeah, so 2634, quite nice. That was at the end of the day. So again, nice movement up on bonds in just a few days. If you guys remember, you don't always have all that much movement in bonds, but it's nice because bonds tend to be a safe haven and can give you some nice trackable movement, particularly when stocks start having some shudders. So that's where we are as far as bonds go. That is in play and is looking quite nice. Now, lastly, we go to gold. You know what I've been hoping for? A weekly vertical crossover going down on gold. Are we going to have it by the end of the week? Maybe. We've thought that a few times over the last 3 weeks. Hasn't happened yet, but maybe. Green up candle forming as far as Heikin Ashi candlesticks go, but our price percent oscillator is trying to cross over going down. Derivative oscillator gaining downward momentum on that weekly chart. We see on the 2-day chart, after 5 candles of up movement, we see a red spinning top, means indecision tending down, still down. Derivative oscillators flipped over, which isn't so good for that weekly vertical crossover happening, but maybe it will. Red spinning top means indecision tending down. Price percent oscillator appears to be, it's moving down about flat, but it is moving down. That derivative oscillator is positive, though. A little bit of something to pay attention to. But we see the 4-hour chart crossing over, going down, which is good. 2 days of down movement. Again, gold down 0.52% for the day. Derivative oscillator crossing at the same time. The price percent oscillator, we like to see those happening together. So maybe this will be some sustained down movement. We'll see if we have that weekly vertical crossover at the end of the week. Those of you who are signed up for the texting service, you got to live in the U.S., we'll send that text out to you if indeed that occurs. If that does not occur, of course, you're not going to be bothered with a text. If you live outside the country, all I can ask you to do is, we don't have that service available internationally, but we do have the ability to, what we always do on our weekly comprehensive review and forecast, we'll tell you that occurs. So just listen over the weekend, and you'll know if there's a weekly vertical crossover on gold going down, so you can be primed and ready to jump into gold on Monday. What does that mean? Well, we explain it in the book, and I'll also tell you what it means right now. It means that if there's a weekly vertical crossover, we check the charts after idiot hour on Monday around 10:30, once the markets settle out, and we see just what gold looks like. You can look at the 30-minute chart around 10:30, or you can wait till noon and look at the 4-hour chart. If things are still trending down, then that gives you a possible jumping in point. Again, all the charts all the time, jumping into a down move on gold. That is either by purchasing, again, a virtual trade in an inverse fund in gold, such as DSG, which is an inverse fund in gold. Sorry, DSG. Well, I've got the wrong inverse fund here, folks. Sorry, it has been a long day. Why am I not remembering the proper fund? Anyway, I'll put that in the show notes for you. I cannot remember the inverse fund in gold right now. I thought it was DG. It's DGZ. Okay, there we go. I don't know why. I just couldn't remember. There we go. So again, you can do a practice inverse trade in gold. And again, if gold crosses over on that weekly chart going up, it may give you the possibility of riding an uptrend in that. We'll just wait and see what there is to see. If indeed that occurs, you can do a practice trade in that. Now, if you've not purchased our book, I would encourage you to do so. You can find links in the show notes on how to do that. We're now in our 8th printing of the book. If you don't have our Trader's Journal, you can also order those. We give a discount if you order a year's supply of those. If you live overseas and want to purchase the book, email us, cw@chartingwealth.com. You can't buy it with the link. For some reason, we can't clear foreign credit cards, but we'll send you a PayPal invoice. You can pay that. We'll get the book right out to you. And again, if you want to be a Patreon supporter, we'd love to have your help. Do not forget, Patreon members, we need to go ahead and start getting your questions in. We will have a Patreon call in this next Wednesday at 12:30. Also, for our intermediate Patreon members, we need to schedule your 15-minute personalized telephone call here over the next week or so. And if you have charts that you'd like us to review, whether they're stock charts or ETF charts, go ahead and get that to us. Of course, Patreon members know how to get to us from the Patreon page, or even better, just email us, cw@chartingwealth.com. You want to become a Patreon member and participate in all this? Follow the link in the show notes to Patreon membership, and you'll get all the goodies. That includes the quarterly chart training that we have on how to follow those massive, big, long-term trends for investing. And again, practice trading in the meantime. And also, we have special training when it comes to short chart trading and our Bitcoin chart, which so many of you have raved over. So that is where we are, folks. God bless you. We love to hear from you. Feel free to write us anytime, cw@chartingwealth.com.